Good morning, ladies and gentlemen, and welcome back to this second day of the conference here in North Shipping. The issue of global governance, as we've been hearing, is clearly very important to all of us here. But shipping remains a business. Individual shipping companies have their own agendas. And operating successfully in this changing landscape does require new thinking. In this session, we hope to learn more about the emerging opportunities in the whole ocean space, not just in the cargo shipping business. But first, we'll hear from several representatives of two shipping segments that have been perhaps hardest hit in the last 5 or 8 years, dry bulk and offshore, and the lessons that they perhaps can see from the experiences that they've had. So I'd like to welcome to the stage our panelists, Khalid Hashim from Pressure Shipping, Herman Billing from Songa, and Njal Sevik from Havila. Gentlemen. Thank you, gentlemen. As I said, the depth of the severity of the crisis has hurt everyone, and some people are actually, in fact, no longer with us in the corporate sense. We hope to have a frank conversation here about what went wrong and what might change in the future. Perhaps we could just turn to the dry bulk business for starters, perhaps closest to my heart, certainly. And Herman and Khalid, you've both many decades of experience in the business, but this perhaps has been a perfect storm over the last 5 or 8 years. What made this downturn different, and what key lessons do you feel you and the industry has learnt for the coming decade ahead? Herman, could I ask you first?
I think we have to take a step back, long step back to, say, 2004, the start of the super cycle, which was driven by strong demand growth from the steel sector in China. And for the first time, I think you had a utilization of the dry bulk fleet close to 100% up to 2008, and leading up to Lehman Brothers. During those years, you had suddenly, there was not enough capacity, but you had huge buildup of shipbuilding capacity, particularly in China. Yards were popping up all over the place along Yangtze River and in the north. And in the heyday, say 2007 and 2008, and we all know that banks are not typically counter-cyclical, so financing was easy available, high leverage, low margins, and in combination with a lot of shipyard capacity, that led and ended with a big bang in November 2008, Lehman Brothers. That kind of led to the kind of first collapse. Then, a couple of years later, with all this capacity, you had a small recovery, I would say, 2011 and 12, and then a lot of vessels were delivered 14 and 15, vessels that the market really didn't need. And in 15, at the same time, that coincided with the first year, I would say in decades, with a negative demand growth. 70 million tons of coal kind of disappeared from the Chinese import. So you had, and then in Q1 16, we all believed that the dry bulk market was structurally damaged, and it will take long time to repair it. I remember in the summer of 2008, one of the leading, head of one of the leading shipbroker companies said in an interview that this is the best dry shipping market we have seen since the Viking Age. And I would say that Q1 2016 was the worst market we have ever seen or since in the Viking Age. So it was a perfect storm and a collapse.
But if so many people were wrong, if the market was wrong in so many ways, how does that affect your thinking as a specific business today? Has it changed your thinking?
I would say that ship owners are famous for a short memory. I think there are other things which I believe will influence it. Financing right now is definitely not easy available. There is a consolidation in the shipping building industry. A lot of bankruptcies, in particular in China, which I think will be extremely helpful. But the problem is that when second-hand values, which kind of correlates 95% with the time charter earnings, when asset values on second-hand values goes up, owners will look for better investment opportunities. And they will turn to the art, but it will not be as easy this time around.
Indeed. I hope to return to the market right this today in a moment.
I think the most important what we see right now is that there is absolutely no ordering. And I think that's the most cheerful moment I have every morning when I read the emails, is that there's no orders being placed.
Excellent. Khalid, you are known as having a more conservative strategy. You have had a more conservative strategy. However, your ships are trading in the same freight markets. You suffer the same low rates. What lessons have you taken away from the last decade?
Well, firstly, like a very famous personality said about new building ordering. He said that new building ordering is not a team sport. It's an individual event. So if I order ships before you, then I'm ahead of the game, and I really don't care what happens after that.
Yeah.
Now, the problem with shipping is that all of us play what is known as the zero-sum game. So if somebody else is winning, that means I'm losing. So when you see somebody else trying to take a leapfrog step ahead of you, you try and emulate that almost instantaneously. So what happens is that you suddenly find that, like Kerman is saying, that you get up in the morning today, read the papers, nobody's ordering ships, and you're so happy. And then one morning you wake up and you find out that, well, everybody has been ordering ships, and now you have a huge buildup of ships. Just to give you some statistics, in 2007, as an example, just in that 1 year alone, 169.19 million deadweight tons of dry bulk ships was ordered. And this is only in the 10,000 and upward sector. That was, at that time, 45% of the existing fleet. And if you think that was not bad enough, you have 3 more years in which owners ordered more than 100 million tons. 2008, 104.12 million tons. 2010, 104.46 million tons. And 2013, 104.12 million tons. And then we say we have a problem. The problem is us. And I don't think this is going to change. What Herman has not mentioned, and which you could look up by Googling, look up any time in history, and you will always find the same statement. Stupid owners, stupid shipyards, stupid bankers, all put together create the perfect storm. And I don't think this is going to really change.
Very well put. And actually, a very powerful statistic that I've seen is that the dry bulk fleet is today 50% bigger, 48% I think specifically, than it was at the start of 2009. The global carrying capacity, which explains a great deal. Now, 5 years ago, I'm sure you in the offshore business would have been looking at the dry bulk business and thinking, well, the silly so-and-sos that how can they have got themselves into such a position? However, the offshore business has suffered its own perfect storm. What are the lessons that you take away from the perfect storm in the offshore business?
It's probably a little bit the same. Growth story, 10 years of continuous growth, oil price high, a lot of new rigs which need 2 vessels, 4 vessels, depending on which area they are growing. And you built a growth story, brokers, bankers, owners, and you just build too many vessels. You get the oil price falling, demand falling, corruption scandal in Petrobras, and all these things coming on the top of each other and make the perfect storm and make the worst downturn ever in the offshore industry. And demand now bottom out, but the supply side is just too high.
Could I ask the parallels with the dry bulk business and other parts of shipping? Was the offshore business seduced by the allure of new technology, high tech, shiny new ships, and then cheap and easy money at the same time? And how do you stop individual owners? How do they restrain themselves from being seduced in that fashion?
I think offshore moving to deep water was technology driven. And of course, especially in Norway, that's been our advantage, but at the same time, our disadvantage at the moment, because we have the most expensive vessels, we have the most advanced vessels, and the demand for that is also suffering higher. And on the other hand, that's also an advantage because you know that it's fewer owners in that segment than in the total market, but it is at the moment, that's the biggest challenge.
We're very pressed for time this morning, but before we come back to the offshore bit, the dry bulk market today, could I just ask you, in your perception of the offshore business, offshore vessel business, today you have a lot of companies that are being restructured. However, they remain very, very heavily indebted, mostly. The market is still very weak. How do you see this business surviving the next 2 or 3 years? Do you anticipate there will have to be another round of restructurings? Do you believe there will be a way to overcome that problem?
Most of the restructuring done is based that the market is coming back and increased. I think.
Is that realistic?
The market would come back, and it would come back up to heights, but it never gonna come back, I think, of the heights we see in 12 and 13, which was a booming market at the end of a real big cycle. So the market would come back, but not back to what we have seen.
In a nutshell, will some of the laid-up ships ever see business again?
Some of the laid-up ships would never come back to the business in offshore.
Would you put a number on that? How many?
No, but there are 300 PSVs listed as under construction or finished construction in China.
Yeah.
Most of them will not come to the market, but if that's going to be 25 or 50, I don't know.
Okay, thank you for that. Very quickly on the dry bulk business, we've seen a flurry in second-hand prices in the last 6 months, up to 50% in some sectors. Herman, in Songa, you've made a very interesting play. You have 10 vessels already. You've inspected many more. Freight rates drove that to some extent. They've now fallen back. Yesterday, the Baltic Dry Index was down at 900 again. Has this mini boom gone bust before it's even started?
I think it's perfect because the order book is shrinking every day.
Yep.
And if we just get through another 6 months, we have twice as many vessels older than 20 years that are on order. And I think this, and also new regulations, which has to do with sustainability, low sulfur, ballast water treatment system will support scrapping. So I think combination of a weaker market and new regulation is very helpful.
If we came back in 2 years, how big will Songa Bulk be?
We will not be extremely big, maybe 15, 18 vessels or something like that.
Okay, thank you for that. Khalid, your perspective.
I can just elaborate some more statistics on what Herman has touched upon, the regulatory environment. I think ship owners are basically irresponsible. They will never scrap enough ships unless they're forced to. And this is where the regulation comes in. If you look at the ballast water management system, as of which is law from 8th of September this year, at the start of quarter 2, that is on the 1st of April, we had 115.51 million deadweight tons of ships that were greater than 15 years of age. Now, it means that sometime during the next 2 or 3 years' time, or next year onwards, they will have to retrofit these ballast water management systems. And I can assure you that the size of the equipment that is required, and we have it on our new buildings, is so huge that none of these older ships have engine room spaces that can accommodate this change. So this is the first big issue. Second issue, of course, is the cost. Then you come to the maximum 0.5% sulfur oil coming into law, burning of that coming into law or by the 1st of January 2020. If by some magic none of these 115.51 million deadweight tons of ships get scrapped during the next 2-3 years' time, then on the 1st of January 2020, this number would have risen to 160 million deadweight tons. Okay, now these will be ships greater than 15 years of age. Now, the problem with burning clean oil is that all these ship engines are designed to burn really dirty crap. Now, you can't take a Lamborghini and put diesel oil into it and expect the car to run. Similarly, if you take a very old designed engine, which is designed to run on very dirty, crappy oil, and you start to put clean oil into it, the ship will break down. So these ships will have a big issue ahead of them. They will have to think of fitting scrubbers. Now, scrubber technology, first of all, is only lab tested, so we don't know whether it works. Two, we don't know whether the lab tests are verified correctly or not, and we know about the famous Volkswagen cheating on emissions. Then you've got, on the scrubbers, you've got lab tests, but you don't know in reality. Now, we've just got news of a ship which trades only in Mexico and US Gulf, so needs this scrubber system being retrofitted today in China. And we were horrified to learn, first of all, that the cost just for the main engine, not for the auxiliary engines, is more than $3.5 million. And that it will take 4 months to retrofit. And in a first-class Chinese yard, which doesn't have too much business, as Herman has already said, and has so many people to throw at this project, still minimum 4 months' time. So I think that these two regulations, one way or the other, they're going to remove the supply, not because we're responsible, but because we'll be forced to.
Excellent. Gentlemen, thank you very much for your contributions. Very pithy, very to the point, and most informative. Thank you very much indeed. Excellent.